Welcome back to the Retire Young podcast. Don't forget to subscribe to the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. If you're just tuning in, Al was shedding some light on what's happening with these financial markets, but really how to have the hands-on education to reach the goals that you have in your finances, whether you're in your income years or during retirement. It's all about supply and demand, and it's just buying where the banks are selling, but also selling where the banks are selling, and having that proper process and just having that plan. So, Al, you wanted to get into the emotional side of trading because we're seeing a lot of volatility right now, which is really good. I mean, this is a great time to be a trader or investor because of the volatility, but it does bring on a little bit of emotion. So you have to be agile. You have to be quick. You have to be quick on your feet, be able to make those proper decisions. But I'm guessing you're going to talk about having a proper plan so you don't have to make emotional decisions. Enlighten me a little bit.
Yeah, exactly. Having a plan, as I mentioned before, is extremely critical. I'm going to talk about that in a minute here, but I just want to go back a little bit to what I said in that last session. I started talking about identifying the supply and demand imbalance because the turn in price, and as I mentioned, turn in prices were the high-quality trades to start. And the origin of any move in price in any market is when supply and demand is out of balance. So the key to being successful using that is being able to identify those moves in advance. And that's what our core strategy does, what the patented strategy is that we have. And what it does really is it shows you how to look at a price chart and then analyze that chart, analyze what you see in the chart for different things that identify the probability of certain things happening, what we call odds and answers. That's part of the rules that are part of this plan. And any kind of a plan, any trading plan, any investment plan should involve controlling emotions. And you do that by following a set of rules. It's a step-by-step process. Make it mechanical, so to speak. So it takes as much as possible the thinking out of it. And why is that important now? Well, changes are happening so quickly, you need to be ready. Some people took advantage or are taking advantage of this market drop early on. And then but they were ready because they knew what to do. The quickest move ever that we've ever seen in this market has just happened. At some point in time, there may be a similar quick move the other direction, and being ready to take advantage of that is really important. That's where agility comes in, Josh, and that's why I mentioned that before. Mm-hmm. The definition of agility is having the ability to move quickly and easily. And a couple of the synonyms are readiness and quickness. Another definition, move quickly with speed and ease, the ability to change direction quickly in response to a stimulus. Well, that's what we got. We got plenty of stimulus out there, and the key is to be ready to take advantage of it. You cannot control what's happening. You can't control the timeline of this coronavirus. You can't control the timeline of what's going to happen with the economy, but you can control how you respond to it. We always used to say that the sentence that really does not make sense, you can't say that this is true, is that it's not different this time. But you know what? This time it just might be different. The catalysts are going to change, but sometimes they'll change very, very quickly and often. But what moves the price isn't going to change. So it's critical to understand what that is and learn how to take advantage of it.
Well,
that's what we do in.
Well, Al, that's why it's so important to be agile, because you don't know what's going to happen. We don't know if it's going to be different or not, but it doesn't really matter. You have to adjust and you have to adapt to the situation.
That's correct. That's correct. And the great thing now, Josh, is that we're seeing opportunities pretty much on a daily basis, sometimes multiple times on a daily basis, if you know how to respond to what's going on. The typical way of investing that Wall Street has kind of pushed on us is this buy and hold strategy, where you don't worry about these drawdowns. Don't worry about corrections. You just put a portfolio together and hold on to it. Well, how's that working for you now? What kinds of things have you been told or have been advised on that will help you make money when this market is going down? Mostly the advice that you're getting is just hold on, don't worry about it. So you're paying somebody to tell you just to hold on and watch your portfolios, be negatively impacted when you might have had an opportunity, if you knew how to do this, how to protect yourself. And that's the first thing that we teach is risk management. We teach protection. And unless you know that, unless you have a good grasp on how to manage risk, you really shouldn't be in the market. Or you need to find somebody that will help you in a way where they are protecting you and they're giving you opportunities to make money when the markets are fluctuating the way they are. And, it's going to continue this way for some time. This kind of volatility is going to be with us for a long time.
It is. I mean, volatility is a great thing. And I just want to just tackle this buy and hold situation because, the TV, brokers, advisors, Wall Street, they have everybody, almost everybody, hopefully other than listening to the Retire Young radio show, those people, they have everybody convinced that that is the way to go. Well, over time, stocks, yes, do go up. But remember, I said the word time. You lose that time. And I actually have a lot of conversations with people, and everybody is so convinced, but now they're upset because their broker is keeping them in their portfolios. People are losing money, and there's a lot of opportunity out there. So once you learn the skills, which you haven't been taught yet, but once you learn those, hopefully you can protect what you have, but also grow that in any type of market. And then that way you're not at the mercy of your broker and maybe their best interest. Because that's the thing. They got to make money too, and they always are going to make money because they're charging fees. And we're going to talk a little bit about that probably in the next segment. But a lot of people, Al, want to start to make better decisions to create another source of cash flow. A lot of people are probably off right now. Now's probably the best time to do that because things are going to go back to normal. But what's the problem there? People might be more busy than they were in the past because they're trying to play catch up. So now is that time to start learning the skills of trading and investing because all you need is an internet connection. Now, Al, we talk a lot about stocks, and that's what everybody knows. Now, anybody that's listened to the show in the past, we talk a lot about futures. We also talk about Forex and options. Explain what these leveraged asset classes are. I'm going to give you a little hint on that one, Al. Leveraged asset classes. Explain what those are, just because a lot of people want to be able to participate in the market, but maybe don't have that $100,000, $200,000, $300,000 that you might need in the stock market. Explain why you might be able to use smaller amounts of capital, but do it any time of day.
Events like this, Josh, emphasize the importance of multiple sources of cash. We talk about this all the time, but I think this really has driven that home to a lot of people because a lot of people are going to end up, at least for a while, without a source of income. So having that extra cash, having the ability to generate that is extremely important. And being educated, having the proper education, being ready, being agile, those are the ways that you can profit from what's coming. Now, one of the things that we emphasize to our students is something other than just trading in the stock market. And it's using leveraged assets. And we're talking about the futures market, the Forex market, the options market. With stocks, and I think you hit on it, if you're going to put together a 100-share position of some of the good companies that are out there, you might be talking about $20,000, $30,000, $40,000, $50,000 in each individual position. Well, you don't need to put that kind of money into an investment or a trade to control a large amount of money as far as the investment is concerned. We're talking about leverage. So maybe you're looking at 10 to 1 or 20 to 1 or 50 to 1 leverage. Earlier in this past week, to control $120,000 worth of a futures contract, you only needed to have $1,700 in a margin account. So that's $1,700 to control over $120,000 worth of an investment.
Say, Al, let me just jump in a second. Now, we talked to a lot of people think leverage is a bad thing because people think, oh, I'm going to lose all of that. Why? Well, how do you protect that then?
Well, the first thing, we have a trading platform that our students use. We give it to our students to use, and it's kind of personalized to each individual. The first question it asks you is the maximum amount of money you are willing to risk in any trade. Maybe it's $100, maybe it's $50, maybe it's $200, depending on the size of your account. But you are starting right out by saying with a maximum amount you are willing to risk in any one trade. The platform then takes you down the path of identifying the right quality or not quality trade, and it will let you know whether you can do the trade based on that risk. So it's controlling risk. You can't do anything. Even with an individual stock, you shouldn't trade it unless you have some kind of risk management strategy in place. Same is true with futures, forex, and options. With the leveraged asset classes, you can manage risk. We teach you how to do that. And it's part of any position that you're in. Never do it unless you understand how you can control that risk. So you have the ability to put small amounts of money into a larger trade and then reap the benefits of the movement of that larger position. With futures, you can trade the major stock markets. You can trade commodities, sugar, corn, soybeans, hog bellies. You can trade oil, gold, silver, currencies, interest rates. The great thing about futures is you've got all those different things that you can trade. Almost always there's going to be something moving in one of those areas, so really give you some great opportunities.
Well, Al, it's also a nice way to hedge your positions as well, because when the stock market is going down, some futures contracts are going up. There's another way to hedge.
Oh, exactly. And who uses futures other than let's say major airlines, companies like General Mills or Cargill that use futures contracts, so they have a better idea of what their budget is going to be. That's how they boost their profits. But so do traders, investors, traders. The Wall Street firms back in 2008, when shorting was held up for a while, they were using futures and forex. You can sell those. You can make money in the down market using those assets with leverage. The foreign exchange market, you're looking at the difference in exchange rates between two different currencies with 50-to-1 leverage. I mean, that's huge. That allows a lot of people with small accounts to be able to participate in a way to really take advantage of moves in the markets. Both futures and forex trade 24 hours a day. So you have a great opportunity to trade when you have the time. You don't have to be available just during the stock market. They have tax advantages. Futures, the default way of handling futures is a 60-40 split, where even though you're trading them because it's a short-term trading vehicle, typically you're in and out of a trade maybe in a day or a couple of days, but it's treated as 60% long-term capital gains, 40% short-term. So you get a significant tax break there. You can do the same thing with Forex. Now, options are great. Most people don't understand them, but I think I don't know if we have time to do that in this session, Josh, or we should hold on and go into that in the next session.
Let's get into options in the next segment, because we're going to be talking a little about retirements. But I mean, for income, or if people are looking for extra cash, you can utilize smaller amounts of capital. It doesn't matter, what that dollar amount is. You can determine that because you have that leverage. So treat leverage as a great thing. But also, what Al was talking about is managing your risk. Have a stop loss on your trades, and that's a lot of things that we teach is the skills to have proper stop losses, proper risk management, being able to get in the markets with less risk. Thanks for listening to the podcast. Don't forget to check out our website at retireyoungaudio.com.